This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora. Welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The fiscal bazooka is reportedly in place in China, and it is bigger than expected. But first, US retail sales remain strong. The Red Book Index rose 5.6% last week, its biggest gain since early September, and better than the 5.3% in the same week last year. And the number of job openings in the US fell by 418,000 to 7.4 million in September, from a downward revised 7.9 million in August, and below market expectations of just on 8 million. It's the lowest level since January 2021, indicating the labour market is cooling. Quits fell to levels last seen 4 years ago. Just how fast this labour market is cooling is going to be known on Saturday New Zealand time when we get the US non-farm payrolls for October. That is expected to show a net 115,000 gain, but it might be better than that. The US Conference Board Consumer Sentiment Index bounced back in October, confirming the similar University of Michigan survey earlier in the month. This wasn't expected, however. Also surprising was the rise in future expectations. Consumers' assessment of current business conditions turned positive. Views on the current availability of jobs rebounded after several months of weakness, potentially reflecting better labour market data in the month. And here's another positive signal. The Dallas Fed Services Survey rose in October after being negative in the past 30 months. Ahead, firms are optimistic, even if election uncertainty is showing up in the survey. And the US merchandise trade deficit widened sharply in October to $108 billion, the widest since the disruptions around Russia's Ukraine invasion onslaught. As a proportion of US GDP, however, it isn't overly significant. This time, it is higher demand for consumer goods driving imports. There was another US Treasury bond auction early today, this one for their 7-year bond, and again very well supported. But the yield rose to 4.17%, up sharply from 3.61% at the prior equivalent event a month ago. And Reuters is reporting that China is considering issuing a massive 10 trillion yuan in extra debt over the next few years to revive its fragile economy. This fiscal package is expected to be further bolstered if Trump wins the American election, they say. This is far more money printing than was originally expected. In Singapore, things aren't great. Their producer price index plunged 7.1% year-on-year in September, following a 3.4% decline in the previous month. This was the steepest drop since August 2023. In Germany, their GfK Consumer Climate Indicator rose to a much less negative level in October. It was the highest reading since April 2022, with sentiment improving for the second month and exceeding market expectations. Income expectations strengthened, and consumer propensity to buy reached its highest level in nearly 3 years. And the EU is pressing ahead with a sharp tariff rise on China's EVs to counter state subsidies. The US Treasury 10-year yield is now just on 4.29% and unchanged today. And the price of gold will start today at $2,767 an ounce and up $24 from yesterday. And oil prices a little changed at just under $67.50 a barrel in the US, while the international Brent price is down to just under $71.50 a barrel. That there is essentially no change is impressive, because the US is buying to restock its strategic reserves now. And the Kiwi dollar starts today at 59.6 US cents and down 20 basis points from this time yesterday. Against the Aussie, we're up 10 basis points at 90.9 Australian cents. Against the euro, we're down 10 basis points at 55.2 euro cents. That all means our trade-weighted index starts today at just on 68.7 and down 10 basis points from yesterday at this time. And the Bitcoin price starts today at $72,595 and up a very sharp 5.5% from yesterday. Volatility over the past 24 hours has been very high, at just on plus or minus 3.1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.